The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Oh, beautiful Thursday morning to you. It's a nice sunny day up here at 7,000 feet. Hope it's a beautiful day where you are and you're enjoying your Thursday morning so far. So what do we got here? We've got ourselves Cisco not dragging down the Dow. NASDAQ at this point trading a little lower, S&P 500 just a little bit into positive territory. And as we've seen in recent sessions, we have had that intraday volatility, so really hard to say where things are going to be ending up. So we had the fourth edition of the Low Price Leaders newsletter. Went out yesterday. If you have not yet taken your trial to this, you can get the information on TFNN.com. You know, we do have, I just happened to look up on the screen, and Terry there in the Tiger Den said sick market. Yeah, then, and not in the hip-hop sense of sick, like, wow, that's sick. No, in the not so healthy market right now, but you know that's okay. We need these consolidations to refresh stocks, to allow bargain shoppers to come in there and to grab some more shares. You know, the run up is inevitably followed by some kind of area of consolidation, which is inevitably followed by a fresh run up. Happens time and time again. You know it'll happen this time too. I saw something funny either yesterday or the day before. My friend Dave Fry, who has appeared on a guest on this show, he's the editor of ETF Digest, terrific ETF investor and analyst. And he just made a funny little offhand remark, which I agree with. It's snarky, but it's funny. Just how much the market was so surprised all of a sudden by Europe. Like all of a sudden, like, oh my gosh, you mean these problems are still here? Well, let's panic a little bit. You know, it's that shows you that emotion, the human factor, is still very much in the market. You know, people fret about the high-frequency trading. I don't really want to get into that whole discussion, but time and time again, when you see the news developments, when you see the panic in the market, that tells you the human element is very much in there, and we know that. You know, I talk to a lot of the institutional investors. They are making judgments about stocks. A lot of these guys, the fund managers, tend to be more on the buy and hold side, not necessarily the panic guys. Does seem to be more of the trading types that are kind of get in and get out of these things. The mutual fund managers and a lot of the hedge fund managers do tend to kind of sit through a lot of these. But you know, if there's a sudden sharp downturn in something, those guys are going to at least pair their positions as well. You do have a lot of these stops that will get triggered, so you do have events that will accelerate the panic selling when it does begin. So just got a lot of different things going on today. Today meaning just with the current state of the market. So let's see here. Just what I want to do in today's show, as I mentioned, we have the fourth edition of the Low Price Leaders newsletter out there. In this sickly market that we have right now, not a good time to be jumping in there with new longs. And by the way, these are longs. I'm not going to be advising people on short trades in this, particularly in some of these names that tend to be pretty illiquid. You'd really, I'm not. It's tricky to be messing with that. could require quite a bit of additional full-time attention for folks to make sure you get that right and really don't lose your shirt on some of these more volatile trades. So really what these are equity longs. We do have right now, there are 3 trades on. And these were entered into as the market went into an uptrend back at the in the later part of last month, was confirmed by heavy volume price gains on the major indexes. And they're holding up well. So I'm not they have not triggered my sell signals yet, and that's a good thing. When you do see that happening, it does show you that the stock you're in is holding up better than many in the market. But nonetheless, keeping an eye on these and letting you know what the situation is. So that's what we've got going on right now in the Low Price Leaders newsletter. And as I was starting to say there a moment ago, there will not be new buys most likely at this juncture until we get some kind of significant market-wide sell signal in terms of price and volume. Moving averages also play a role in determining the buy signal. Did I say sell signal? I may have. Until we get some kind of buy signal that is confirmed on the major indexes, at least one of the major indexes, and of course, the Dow, being that we're talking about small caps, low price names, is the Dow so relevant to these? No, it's really not. Really looking more at the S&P 500, even the NYSE composite, the NASDAQ, of course. I've put up a chart there on Tiger TV of the Russell 2000 ETF, the IWM. On a daily chart, you can see that this is still, it's been hovering between that 50-day line, that 200-day line, so really not right now. That particular index not flashing any kind of buy signal at this point, also below some of those shorter-term moving averages. It is holding within its recent trading range, not undercutting its prior low from April 10th. Looks like that did hold up as of earlier this week. Yeah, so that's a good sign to see. Let me show you that there on Tiger TV. It's kind of a little bit hard to see on here. You can have a little bit of an optical illusion, but it actually, no, you know what? It did. I'm looking at it here. It did undercut those prior lows, but pretty much within range. So looking pretty good right there, just in terms of getting some support there, close to 78. Getting support there close to that 78 level right in there on the IWM. So that's what we're looking at right now. So just kind of trending along here, just kind of treading water, marking time. As I mentioned, it is a good sign when you see some of these names that are able to outpace the general market. So just watching some of these, those are the trades I do have on right now, holding up, just keeping an eye on them. So today, as I said, what I want to do is go over a number of the charts for some of these smaller cap names. And what's interesting is, and this has been kind of a fascinating thing to me for many years, is that, you hear kind of a lot of, in my opinion, hysteria, panic, a lot of the emotion that goes on in some of the mainstream financial media. And I understand they're in the business of creating conflict. They're in the business of creating drama. If it's too boring, if it's all too measured, people aren't going to watch. I mean, let's just be honest. People like the drama. I've seen it. I've seen, and I've got to interject a little something here. You do talk to a lot of people, a lot of investors, a lot of traders, and they'll kind of nod their heads very sagely and say, well, yes, it's all about logic. It's all about logic. Don't kid yourself. If you're not careful, it becomes all about the emotion. And I seems to me like a lot of the people I see who are not necessarily so much in the Tiger audience, because I know we've got a lot of folks, everybody out there is a trader or an investor who really, really understands the idea using signals, using proven indicators, using quantitative indicators of some sort to keep the emotion at bay. I think these people that say keep the emotion out of it. Well, good luck with that. Again, I think you've got to keep it at bay is what to do, and maybe acknowledge when it's creeping in, how to deal with that. And it is easy to fall into panic mode at a time like this, or in a roaring bull market, to go into euphoria. So that's really the thing that I realize everybody here understands that and acknowledges that, but it is kind of funny. I was speaking to a group, actually this goes back a few months, back in January, and I did do kind of a quick survey around the room, and these are not necessarily traders, as active traders or investors as we have here at TFNN, but I asked folks, I said, what do you see, do you believe this investing is about logic or about emotion? And again, everybody's like, oh, it's logic. So yeah, that's kind of a little battle to be fought, but I think the mainstream financial media puts the lie to that, because it's all about the drama. It's all about the conflict. It's all about bringing on folks who can battle and have different points of view, and to panic people, quite frankly. So I think there is a lot of that, just to get everybody emotional about this stuff. All right, so we're not going to do that today. Let me put up a chart here. I've got about another minute, and I'll put up a chart that I've talked about in the past couple of shows I've done here. This came up last week. I brought it up again in Tuesday's show. I wrote about this one the other day. This is Sync, SYNC. It provides a platform that allows cable, telecoms, other content providers to manage and integrate their content across various platforms. They just made an acquisition in the mobile area. Now, this is pretty healthy. This is one of the kind of things that I like about market corrections. You notice that Synacor had rallied to a new high. We had, I'm showing it to you there at a daily chart. You can quite clearly see it. I'm actually going to go over, if I can here, if it's going to let me, there we go over to a weekly chart. Now, you don't see a whole lot of weekly bars on here because this just went public back in February, so it's a pretty new stock, but you can see some big weekly price moves here after a little consolidation, looking very good. Let me put it back on a daily. There's my music. I hear that. And I want to come back to this after the break, and I'll just show you a little bit. I'll talk about this and a lot of other stocks that I am screening for that are consolidating in a very healthy fashion. 877-927-6648. Give a call. This is the Small Cap Roundup. Be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investment Newsletters and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom Petty, having a little discussion about Tom Petty there in the den. Always fun. If you're listening to this show and you have not logged on, checked out the Tiger Den, do that. And if you have not checked out the Low Price Leaders newsletter at TFNN.com, gotten your free trial, please do that. We do have, as I mentioned, 3 trades on right now, and quite an active batch of watch list stocks. And that's really what I like to do in these times of market consolidations. Just keep managing the watch list. It can be incredibly fruitful when a new uptrend does emerge. Now, occasionally, as happened a few weeks ago, the market can confirm a new uptrend. It's very, very fragile in those first days as a new rally begins, and doesn't take much at all for a lot of the traders to have second thoughts, causing some heavy volume selling, and that's what happened this time around, of course. So I have the chart there from Synacor, and I want to just talk about this for another moment, and then move on to some other names that I'm looking at right now. Now, this one, if we were in a bull market right now, this stock would actually be a viable buy candidate for an aggressive trader at this juncture. It is holding above its 10-day moving average. You can't really see it on this chart right here. This is the 50-day line. So you see it's well above the 50-day, also above the 10-day, and, of course, the 20-day. So you had a little pullback here. So in this area where it pulls back and it's getting good moving average support above those short-term lines, and it's still below the prior high before it pulled back. You know, in a bull market, this could offer a good opportunity for an entry point. But again, we're seeing that there's just way too much pessimism, doubt, indecision in the major indexes at this point. Just kind of still watching the NASDAQ. It's about flat right now. Flat statistically, but slightly to the downside, looks like. Okay. So yeah, so we're just, we're just seeing indications that there's too much doubt right now, that a buy is risky because it could get pulled back down very, very quickly, shake you out very easily. Okay, I want to move on here, and I've got a couple minutes. I want to show you, let's see here. I've got too many little boxes there typing in the wrong. There we go. There's the right one. ELLI is the ticker. Ellie Mae. The Beverly Hillbillies. No, not exactly. Nobody's loading up the truck and moved to Beverly. What this is a very interesting chart for a company that makes mortgage origination software. And I just wrote about this recently. Now, take a look here on the daily chart. Notice all this very tight trade, some accumulation right there. That's a nice sign to see, right as a stock is kind of treading water. I mean, while we're in a time right now when the major indexes have been selling off, when there's been indecision, look at this. That does not look like indecision in this particular stock, does it? That looks like there's a whole lot of certainty about keeping the price right in this very, very tight range. And you know what that means? That often means it's setting up for some kind of fresh rally. And very, very often it's the market that is sort of keeping a lid on a stock. It's like that spring that is, it's like there's something that's weighing down on the spring, and when you remove that weight, which occasionally is the general market weakness, when you remove that weight, you often see that some of these can really, really just take off. So there you have Ellie Mae. Really like this. May, June, July. Yeah, so they just reported earnings not too long ago, so the earnings will not be a catalyst for quite some time. You do see back in here a few days ago, there's your earnings boost, okay? Very normal to see a stock correct a little bit, consolidate a little bit after an earnings report. So right in here, not only is it not pulling back in a weak market, but just really, really holding in a tight range. So let me just give you, I've got a few more seconds here in this segment, give you a little bit, some factoids about this. Market cap of $331 million, trading about 100,000 shares a day. So that is on the thin side. So you got to be a little bit careful on this one. So nonetheless, looking good, and some double-digit earnings estimates coming up in the next 2 years. So this is one I like a lot as a watch list name at this time. All right, we'll be right back after this break right here on the Small Cap Roundup.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we had the European close, and it looks like, sometimes we get a little bounce in the U.S. indexes shortly after the European close. Looks like, last I looked there a few seconds ago, the NASDAQ was still just fractionally lower, and the NYSE indexes, actually it's fractionally lower, but less fractionally lower. NYSE index is still holding up with some moderate gains. And let's see, we have the euro positive territory moving up against the dollar. That often gives U.S. stocks a boost. In the past year or so anyway, there has been some correlation with that trade frequently. So I'm just kind of giving you the real-time report here of what's going on. Okay, let's take a look, though, at some of these small caps. I want to show you an interesting name here, Tango. I've talked about this quite a bit. TNGO is the ticker. Haven't looked at it lately. Now, you see here, let me just set the stage here. This has a market cap of about little over 800 million. Some decent liquidity for a smaller cap name, moving about 630,000 shares a day, so not so bad. Terrific track record of earnings growth, spurred by revenue. If you heard me, I was on Tom's show the other day. We were discussing that very thing, how a lot of these smaller companies, they really do show some terrific revenue growth. And, Tom was making the great point that's, You can't fudge that the way a lot of these companies massage their earnings. You see all these different charges that are taken or not taken, or just different ways that things are moved around quite legally to make things look better. We just get some very smart accountants on there. But nonetheless, you do see a terrific history of revenue growth, solid earnings on this one. Let's see, for the next couple of years, 2012 expected to show income of 42 cents a share. That would be a 50% increase over 2011. 2013, let me move over to my other screen here. Okay, 56 cents a share consensus estimate. That would be a 33% increase, not too shabby. This company makes software to help businesses manage their telecom operations, their telecom services, which of course means communications, data, not just phones anymore, obviously, data management, just really across the board to help them integrate a lot of these systems. And it was interesting because I remember a few months ago I heard a Raymond James analyst come on and talk about this stock, and not that I really do not give much credence to what the analysts say one way or another. They can be wrong, or they can be, as they say, they can be right, but they can be early. So you hear that a lot, it's making long-term forecasts. But this guy caught my attention because he was making the point that his office uses Tango, so he had some personal experience with how the actual software product works and was very impressed with it from that perspective. So I have to say I gave him a bit more credence just because he was transparent and talked about that, being an actual user of the software. So let's take a look at the chart. Let me put up a weekly chart here for you of Tango. Now, this is one of those things I like. It's a recent IPO, went public less than a year ago, late July 2011. If you run scans of many of the market's leading stocks, especially when it comes to, if you want to combine fundamental performance, as in earnings and sales growth. I'm not talking about PE here. That's what a lot of folks mean when they talk about fundamentals. I'm talking about earnings and sales growth combined with institutional buying, sending a stock to new highs. Frequently, companies that went public, actually going back maybe a decade or so, 12 years even, those are frequently among these stocks that are leading the market in terms of price performance, that also have that good earnings and revenue growth driving that price performance. Okay, so Tango falls right into that wheelhouse, went public, as I said, less than a year ago. Let's see, looks like it ran up to a new high, actually not today, but yesterday, ran up to a new high, pulled back. So this is an interesting one because it did clear a consolidation. And if I put it on a daily chart, I'll move it back to a daily chart, a little easier to see. Okay, so you can see over here it did clear a little area of consolidation. The high price before it pulled back right over here was $21.74. And it's actually at about $22.16 right now. Folks, if we were in a bull market, this would be a ridiculously, insanely strong buy candidate. However, we are not in a bull market, and it becomes very, very tricky to enter into any of these positions. As I was saying before the break, you could suddenly have, some other wacky news out of Greece that has nothing to do with managing data systems in offices in the U.S., but that'll just drag everything down again. So I'm just kind of keeping an eye on this one. I like this one. Just kind of popped onto my screens today. But this is the kind of, well, that's not literally true. It's been on my screens for months and months and months. But it did pop onto some of my best price poppers after yesterday's big move up. So it just kind of re-entered some of my other more immediate screens. But yeah, this is one I've been tracking. I was actually in this one a few months back, and it's a tricky one to hold. Well, you can see it here on a daily chart. You can see it is volatile. It's got a beta of about 1.09, so a little more volatility relative to the general market. But a lot of these smaller cap, newer names that have not yet attracted a whole lot of institutional investment, a lot of these do tend to be a bit more volatile, just very, very frequently the case, as I mention often here. Okay, so that's Tango. So that's one, just to point out to you that if we were in a bull market right now, that would definitely be something that we might be taking a look at as a potential buy. Let me go to another IPO, and this is a site that I like a lot. It's Zillow.com. Ticker is Z. Let me put this up here on a weekly chart for you, and we could take a look at how this one's been doing. Now this, you can't really see the whole thing here. This is another one that went public back in July of last year, and it struggled. One of the things, as we all remember very well, that began to happen late July, one of the things that happened was, of course, the market went into that downturn in the summer of 2011. Boy, I remember that very, very well just because of where I was. I was actually August 5th was a big day in the market. I was actually at my niece's wedding that day, and no, I was not. I was out of the market, not obsessed with what was happening that day. I was definitely enjoying the wedding, enjoying family and friends. That's the nice thing about getting into cash on a day like that. You can enjoy what's going on, and you don't have to worry about being destroyed on a big market down day like that. But yeah, I remember it very well. So Zillow, the real estate information publishing company, great site. I've been using this for a long time. So you see, it's now beginning to finally emerge, show some technical strength. Let me see here. On the weekly, you can kind of see how this last little area of consolidation, I'm going to put this back on a daily for you. And you can see, there we go. This is perfect. If you're watching on Tiger TV, you can see I've got the daily chart for Zillow up there showing you that terrific moving average support right there at that 50-day line, jumped above that line. Now, let me just take a look at something here. Yeah, this is also right now above its shorter term moving averages, the 10-day and the 20-day. And we actually had something very bullish happen here just, let's see, looks like late last week or earlier this week. We had the 10-day moving average cross above the 20-day line. So, again, let me just reiterate. I'm kind of showing you these names right now. Unfortunately, because the market is in a correction, the thing to do with these is just to watch them right now, because it's all too easy for a stock to get dragged down by a fresh bout of market pessimism. And we all know it doesn't take much these days for a new bout of pessimism to get interjected into the market. But Zillow is one I like, and if we were talking about being in a bull market, a market uptrend at this juncture, absolutely. Really like the action on this one. Definitely one to watch. Check this out. So the company had not been profitable for several years in a row after its formation, and that's very common in startups. The venture capitalists expect that. The private equity investors expect that. The management team who founds the company, they expect that. However, it swung to profitability in 2011 of 10 cents a share. 2012 expected to show income of 28 cents a share. That would be an increase of 180%. Let's see, 2013 expected to be earnings of 65 cents a share. That would be up 132%. So, what does that mean? It means that there's good institutional confidence right now in this on the earnings performance. And as we know, We get a whole lot of fund managers on the show. We're actually starting that again next week. I've got a great fund manager who's scheduled to come on the show on Tuesday from the Scout Small Cap Fund, and that should be a lot of fun. Talk to him. I've talked to him before. He's absolutely terrific. He talks about growth names. But if you listen to these guys, these mutual fund managers, what do they talk about? They're not looking at the charts as their method of making buy and sell decisions. Are there hedge fund managers out there who do that? Sure. Are there more trading-oriented fund managers, mostly on the hedge fund side, who do that, small hedge funds? Yes, there are. But when it comes to these mutual funds, they are very, very fundamentally oriented. As you know, if you've listened to the show, I have my views about how appropriate or not that perspective is for a retail investor. But on the institutional side, that is what they do. Earnings growth attracts them to these stocks, makes it show up on their screens. And that bodes very, very well for Zillow, that's the degree of confidence that the institutions have in that stock right now. Now, let me see here. I've got a few more minutes in this segment. I'm going to show you something else, a stock called Thurman Group, if I can get the ticker correctly there. THR. THR is the ticker, and this is Thurman Group Holdings. Now, here's what's interesting. We were looking at Zillow, looking at Tango. There are some industries that naturally attract a whole lot of attention in the general media, among the general public. Tech, of course, being key among those. And that makes sense. It's fascinating, and it's, I kind of like to make the argument that a lot of things that even though the S&P, even though Standard & Poor's categorizes them under infotech, information, okay, technology, right, okay, I could see it. But companies like Zillow, well, that's a media company. Google, that's a media play. Apple, you could say, could be a consumer discretionary or even a retail play. So, it's a little misleading. I mean, a company like Tango certainly makes software for business companies. Yeah, that's pretty squarely in the tech arena. So we're looking at something, however, that is more in the industrial arena, Thurman Group Holdings. Now, let me put this up on a weekly chart and ask yourself this. When was the last time you heard this company getting discussed in the mainstream media? Now, I want to just, while I'm kind of showing you the chart there, and I'm going to put it back to a daily so you can take a look there at that nice trend right along that 50-day moving average. What this company makes, they make basically insulation and heating products and technologies, and it is, there's technology in every industry, obviously, for industrial uses, so for pipes, for construction, just various industry applications. Definitely not the kind of thing that is really going to get a whole lot of attention from the general public or the mainstream media. So that's Thurman Group Holdings. I'll come back. I'll talk a little bit more about that after this break, and we'll be right back with the last segment here on the Small Cap Roundup. Hey, one thing before I go, 877-927-6648. Got time for one phone call after the break. All right, be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, last segment of today's Small Cap Roundup. I just wanted to finish up with Thurman Group Holdings, THR. Folks, this is the kind of stock you are not going to hear about in the mainstream media that you're going to hear about here on the Small Cap Roundup show on TFNN.com. This is the kind of thing that, you know, I would say I love ferreting out these stocks, uncovering these names, but the truth of the matter is they just pop up on my scans because I'm looking for small caps that have strong track record of revenue-driven earnings gains. Sometimes I do scan for some turnarounds. I also scan for IPOs. This one kind of factors in a number of those categories, to be honest. You've got earnings turning around after a year-over-year decline in 2011. Again, not uncommon in new companies. This went public in actually a year ago. Just about exactly a year ago in the early part of May 2011. So far in 2012, Thurman Group Holdings up 22.5% year-to-date. Let's see here. Market cap, $650 million. On the thinner side, definitely moves about 116,000 shares a day. So, you want a little bit of volatility. Could and does if you kind of, let me go back to a weekly chart, and you can see some of these price swings that we have in here. But I love that support that we were just looking at along that 50-day moving average. That is absolutely what you want to see. Let me just take a look here at the shorter term moving averages, just to give you an indication of what are some of the things that I look for right here. So this one right now, you do have the 10-day line is a little bit above the 20-day, and you have the stock is actually trading below both of them right now. So this even in a bull market, this would be one that I would be watching at this juncture. Okay, so let's see. One other thing on the plus side of this one, you do have a steadily increasing number of U.S.-based mutual funds and hedge funds jumping into shares, buying some shares here. So even though it's thinly traded, you do see that. Okay, so that's the kind of stock that I do ferret out. Let me show you one more. I may have shown you this the other day, but these good ones are always worth continuing to watch. This is Beacon Roofing, and this went public a few years ago. It's still well within that window of newly public companies. Yeah, went public in 2004. So still one you would consider on the newer side, on the younger side. Beacon Roofing Supply, pretty much what the name suggests. No mystery here. It's not a women's clothing store. It's a roofing supply store. So nice, again, beautiful support along the 50-day line right here. Steadily higher revenue growth in recent quarters. You've also seen some increase in the pace of earnings growth. Definitely what you like to see. So this is another one of those that is showing a good combination of the earnings, the revenue, and the price strength. There's the 50-day line. You can see that it is getting nice support there, even though we're on a downside day on this stock right now. The market cap, definitely, this falls squarely into that small cap arena, about $1.3 billion. Moving about 380,000 shares a day, so it's a little bit on the thinner side. Sometimes that 380,000 mark can be a pretty good indicator of a little better liquidity and a little less volatility that you might see, although this does have a beta of 1.29. Okay. There's Tom Petty telling me it's time to fly out of here. I'll be back on Tuesday with our guest, Tom Lamming, who is the manager of the Scout Small Cap Growth Fund. You don't want to miss that. Have a wonderful weekend, everybody. I'm Kate Stalter, signing off.